Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. After Bitcoin's breakout from the 11-day descending trendline, we saw a move from 96,500 to 98,400 within a day. Support briefly held at 96,600, but by the evening of the 11th, it failed. Not even the yellow horizontal level at 96,000 stopped the drop. The only thing that prevented further downside was the extended trendline, aligning with the blue horizontal support at 95,000. The price action has been frustrating, with no clear direction. Bitcoin remains trapped in a tight range. Bulls need to reclaim 98,400 for continuation toward 100,000, while bears want to break down below 95,000. Until then, liquidity grabs and fake moves will continue. Later today, we'll get the core inflation numbers, expected at 3.1%, the lowest since April 2021. A lower than expected print could boost Bitcoin and risk assets short-term, increasing rate cut expectations. A higher print, however, could trigger a sharp sell-off. Volatility will spike, so be ready. At the moment, there's no strong trade setup. Bitcoin is at a key level, but without confirmation, staying patient is the best strategy. Rushing in now could lead to unnecessary losses. In other news, Japan is considering two big changes: approving Bitcoin ETFs and lowering crypto taxes. Right now, crypto gains are taxed as high as 55%, discouraging investment. The proposal would cut this to 20%, similar to stock market capital gains. Japan is also reviewing the possibility of Bitcoin spot ETFs, which would allow easier exposure to Bitcoin without direct ownership. The US and Canada already have Bitcoin ETFs, but Japan has been more cautious. If approved, these reforms could drive more institutional inflows and wider adoption. A policy update is expected by June 2025, with potential legal reforms by 2026. This could be a long-term bullish catalyst, but for now the market remains in wait-and-see mode. Join the free Discord for real-time trade ideas. Like the video if this analysis helped you. Subscribe and hit the bell for more updates. And see you in the next one.